Well, there are many types of loans, something for everyone. If you're looking to buy a property, there's a loan for you. Joining me to talk about that today is Jessica Overley. She's with Sibcy Cline Mortgage, and I want to welcome you back, Jessica.
Thanks, it's fun to be back.
I know. Okay, so here we go. So we're going to talk about something a little different today. We're going to be talking about bridge loans and blanket loans and why you might think that that may help you if you're looking to purchase a property and maybe your house is not sold yet.
Yeah, you know, it's interesting. Really, maybe 3 years ago, no one was even talking about bridge loans. And now we're doing them all the time. And it's really the change in the market.
Right.
A couple of years ago, it was very easy to put your house on the market. You get an offer, then you start going and looking at houses, pick one out, boom, you're good to go. Well, we're not seeing that these days. And I think a lot of our clients are just concerned that they're going to sell their house and not have a new one to live in. So we have, when we're sitting down with clients and getting them pre-qualified and we're taking a look at their finances, for some folks, it works out. Hey, you know what? Their cash flow is set up in such a way that they can hold 2 payments for a while. And that's great. That makes it really easy for them to find the house that they like at their time frame, and then go ahead and put their house on the market, and for a while carry 2 house payments, maybe 3-4 months. That's great. However, from a qualifying perspective, a lot of folks don't have that.
Right. A bridge loan, you have to be able to qualify for your home and whatever you're buying.
Correct.
Okay.
But here's the good news about the bridge loan. Our standard folks, it's great. They're holding that full mortgage payment. Let's say you've been in your house for 15 years. So you've got quite a lot of equity in your house, right? But your payment is still the same payment that you had in the beginning, even though you owe a lot less. Well, here's where the bridge loan comes in and really helps a lot of folks out. Because what we can do, you can do a bridge loan 2 ways. You can either pay off your existing mortgage and pull additional equity out, or you can just hang on to that original mortgage and then pull additional equity out. But for a lot of folks who can't hold those 2 payments, by paying off that existing loan, significantly less principal than before, they can also pull out the equity. Bridge loans are interest only. So now all of a sudden, your payment for what will be your departure residence is significantly less payment than before. So now you're going to actually be able to qualify for more house and your new house that you're looking at, plus have more money to put down for your down payment and get it under that 80%, not pay for the PMI. So it's really turning into a win-win for both homes.
So we talked about the bridge loan, and that's being able to afford both properties.
Correct.
And then you call it a HELOC, right?
Right. So now
let's spell that out.
So that is a home equity line of credit. So here's an example that we had lately. We had a lady who had been in her house for 30 years. Right? So think about how much stuff you can acquire over 30 years.
Ooh, lot.
So she had this house, she was getting ready to downsize and move across town into a condo, which was going to be much easier for her to maintain. But we have 30 years of upsizing that we now need to downsize. And from a house perspective, in today's market, if we could update that house, we knew we were going to get a lot more value on the market, right?
Absolutely.
So here's what we do. We've got a mortgage where she only, I think she had maybe 5 years left, but she still had that huge payment. We went ahead and did an equity line because a bridge loan is set up for 6 to 12 months. It's a very specific time frame, and it's set up specifically for houses that are on the market. She wasn't going to put her house on the market right away. They were going to do a lot of stuff to downsize. They were going to do a lot of remodeling in the house. So in this case, a home equity line of credit was going to make more sense for her. So she paid off that little balance she had on her first mortgage. She pulled out the money that she needed to do all of the updates to the house to sell it, and used it for the down payment on the condo. So now she was able to maintain both payments for almost a year while they very slowly did everything and made it very comfortable for her.
So we've got one more example of a way that you can buy a home and still have a home. We're talking about the blanket loan. So we talked about the bridge loan, and now we're going to cover up with a blanket loan.
Well, and that's a great way to look at it. The blanket loan really is that. It's just covering everything. So here's the thing about a blanket loan. A lot of times people will use the word bridge loan and blanket loan interchangeably, but they're not. A bridge loan is just like a bridge, right? It is taking you financially from your departure house to your new house, just like a little bridge.
Perfect.
But a blanket loan, it's like if there's a fire, you're smothering it all out. The blanket loan takes over everything. So it is going to close at the same time as the new house that you're buying, and it's going to take your existing mortgage on your departure home and put it all in together on one big blanket loan.
So you have to be able to afford both.
You do. Now here's the thing.
Okay.
These are usually 3-1 ARMs. These aren't
Oh.
long-term holdings.
Okay.
So if you're looking at a blanket loan, you're looking at holding that for a short term, and then eventually when you sell that departure home, going in and refinancing again. The trick to that in a market like today's market is that rates keep going up. So if you really want to lock in at that 30-year fixed, if the 30-year fixed is the loan that you want, you might be looking at a significantly higher rate 6 to 12 months down the road when you pay off that blanket loan.